and I'll do the transcript.
Oh yes. Oh yes. I did the transcript. I've done it in other Zooms, and there is a save transcript at the bottom, which
Oh,
wasn't
you
really
found it.
when I
Amazing.
don't. I'm going to look at yours. It doesn't say save transcript at the bottom. You won't be able
That's
to save
obviously
it.
we're very, very protective, obviously.
So,
That's probably a setting somewhere our end, so we'll have to
Indeed,
look
yeah.
at that, yeah.
welcome to the Moneytree Mastery Property Show. I am your host, Jackie Dobson, along with my beautiful husband,
Oh, hello, hello.
partner,
It gets
Neil
better every week.
Dobson.
I know.
It's well, we're into like the second week of Feb, aren't we? I can't
Second
believe it.
Thursday, yeah.
It's amazing. This week, this year already is just absolutely flying by. It's astonishing how quickly the days just go. So, Mr. Dobson,
Ah, Mrs. Dobson. Hello. Yeah, hello.
hello.
I'm Neil of the Moneytree Mastery Property Show, and we are here to bring you bang up-to-date information about the property market, the financial market, the lending market. When I say financial, I don't mean stocks and shares. I mean lending on property, etc. And so we're here really to share everything that's bang up to date, all our knowledge, and help you create your own property portfolio, property business, whether it be whatever strategy you're implementing, really, from deal sourcing through to commercial developments and everything. We've got knowledge in all areas. So we're here today to bring you a bit of up-to-date knowledge in that area.
Fabulous. Thank you very much. So we're just waiting for Jake,
Our mortgage broker.
our mortgage broker, to arrive because he's late. I shall reprimand him on his tardiness when he finally checks in. But Mr. Dobson, what is new in your world this week?
Well, what's new this week? Well, my gym regime for the year kicked off yesterday. But there's a very good reason for that. And I'll try not to use bad language in this next sentence. But what I cannot bear is I go to the gym all year round generally. But then when you get to when you get to January, it's full of strangers that have just signed up for their New Year's resolution, going to get fit. Oh, we've got another. So yeah, so people that want to get fit, New Year's resolution, going to lose some weight, gym's the answer. And my mindset is by the second week of February, they're bored of it and they've disappeared. So the gym's mine again. So I'm really not one of these people that likes to chat in a gym. I just want to do what I want to do. It's my downtime. It's my escapism. So I generally don't want to talk to people, but for some reason I must look very approachable. They want to talk to me. So I've actually put it in the calendar now, the evenings of the week that I'm going to venture to the gym. I don't know, many of you who have watched the show before know that last year I got a bit obsessed with it. And I just used to drop everything during the day and disappear during the day at the gym. And that really affected my work pattern and really the results, I suppose. So I'm much more focused about work first, making sure we get the results we want, and fit in the gym around that rather than vice versa. So that's new for me. What about you, Mrs. Dobson? How is the pond dipping going this year?
Oh, yeah, well, it's been really cold, isn't
Right
it?
back at you.
I think that stopped. Well, we went to Bilbao, didn't we, in December, and that was the last time I actually did it. Was
Well,
in
the temperature's plummeted, to be
It
fair.
has been incredibly cold. I think the coldest I experienced, I think, was 2 degrees, and that was really painful. So I've got in my head that when it gets to around about the 7 degrees, I'll start going in again. So I just need to get that into my brain, really. and go and keep checking and seeing what the temperature is. But it's going to be a shock to the system. But I actually do quite miss it. You know, it's.
Why don't you allow me to check the water temperature every day for you, so that when it's right, I can say, right, jump in.
What? And then you can hear my screams as I do it.
As I'm supping on my nice hot cup of tea in bed.
In your nice warm house,
Yeah.
watching me in the back garden. Yes, yeah. So yeah, I have been actually going out there and checking what the water temperature is. Yeah, but it's the mindset thing, isn't it? It is the
It
mindset thing
is. It
of
is. Yeah.
just getting in and doing it, whether it's just a quick bob and I'm out again, or it's a 10-minute jobby. So yeah, but
What
I
I
was
do,
doing good.
I actually prefer it when you don't go in, because on an average morning it only takes you an hour and a half to get ready. When you're dipping, it's 2 hours, and it's a long wait for the bathroom.
Well, you don't get this good looking with no effort. That's all I can say.
Is that a pool in your back garden then?
It's just a
No,
little
it's
deeper
it's
pool.
it's a nice
It's
bath.
like a little blow up pool. Yeah, that's all it
Yeah,
is.
but
That's
I
all
call
it
it the pond.
is.
So anyway, news.
Well, yeah, we've just actually been joined by Jake, so he'll just wait for him to flick a screen.
There
We've
is
been
some
joined by Doreen
big.
as
Here I
well, which
am.
is
Doreen. Hello,
fabulous.
Doreen.
And with Nigel. No, I
And
know that
Nigel,
Nigel's going to hop off halfway through this. So he's already warned us that he'll be disappearing. So we know it will not be something that we said, that he has actually got an appointment that he needs to get to. But it's fab. Jake, hello. How are
Hello.
you?
Yes, not too bad, thank you. Apologies, I was a few minutes late. I know we were messaging just beforehand. I was saying I was joining, but I had a urgent lender call that I had to deal with. But yes, I'm doing well, thank you. How's everyone? How's everything in the Dobson household and
Oh,
elsewhere?
it's competitive.
Jackie hasn't started up golf, surely.
Oh,
Definitely
good,
not.
good
No, no,
gracious. No way.
no.
Can't
That's
think
my
anything
time.
worse.
So that's new in my world, actually, as we were on that subject. I've committed to playing at least twice a week now, and at least one course that I don't play regularly a month. So that's new.
Well,
Obviously.
as and when that happens, let me know. If it's not a weekday, I'll be free.
Oh,
All righty. Yeah, I look forward to that.
fab. We could
Um,
get a Moneytree Mastery golf team
Exactly.
going. That would
well,
be
100%.
we
interesting.
need to set up another event at Birch, another networking event with.
Yes, I did that. I did the one a couple of years ago. I didn't get a chance to join last year's one, but
Yeah, yes, must put that in the diary
Yeah.
actually. Yeah,
Okay,
so
so
Jake, it's fabulous to have you here with us this week. It feels like an absolute age since we saw you, but it was only last week, wasn't it?
yeah, obviously saw.
in person
No,
last
I
week.
wasn't. Yeah, I was obviously at the actual event, obviously on
Yeah,
Wednesday,
at
the
the
physical
networking.
networking.
It
But
seems such a long
it's been a
time.
few since it's been a couple of weeks since I've been on the actual property show Zoom call, just due to diary clashes and everything. So
But
yes,
obviously there's some big news came in the last half an hour.
yes.
So
So I. Oh, sorry,
I'll
carry on.
just introduce Jake before you just hop in, because there are people on the call today that have not met Jake before. So Jake is our amazing mortgage broker. We have locked him in to be the Moneytree Mastery mortgage broker. So he comes to our in-person networking sessions. He comes in when he can onto this weekly show as well. He brings us up-to-date information on the mortgage market, on bridging. He has got his ear to the ground. He knows exactly what's going on. And I know today he has got one hell of an announcement to help us all in our property journeys when it comes to lending. So Jake, if you are ready to take the reins, I shall hand it over to you.
Yes, so obviously, I mean, I'm not a massive one for watching the news because it's always miserable, but when it's financial related, I kind of have to. And the biggest one is obviously every 6 weeks, the Bank of England Monetary Policy Committee meet to discuss base rate. And as I think most experts kind of predicted, we have had a 0.25% reduction in base rate, bringing it down to 4.5%, which is now the lowest it's been in 19 months now. 19 months ago that it was as low as 4.5%. So that's what was really promising to see it was a majority of 7-2 to reduce the base rate, but 2 of those members that voted to reduce it actually opted for a 0.5% decrease, bringing it down to 4.25. So that shows you where a couple of obviously the mindset currently is. Those 2 that obviously didn't want to reduce it, who knows? Hopefully they'll be swayed again in 6 weeks' time to change things. But it's as we all I think as a lot of the forecasts and predictions throughout sort of 2024 were kind of alluding to, we were expecting some base rate reductions into 2025. We obviously got that nice one at the start of November last year. Now, I'm quite often the bearer of bad news when it comes to base rate reductions, because it doesn't always necessarily filter through into the mortgage market, because as many people will know, base rate isn't the only defining factor into what determines the Bank of England, the only thing that determines what mortgage rates lenders offer. So ahead of today's announcement, we were getting a fair few lender emails. They always preempt any changes. Obviously, swap rates also kind of know, I think, in advance whether things are going to be going in the right direction or not. So it was actually quite a mixed bag of emails yesterday. So a residential lender, as an example, HSBC, they sent out an email and it said, all the products highlighted green are being reduced tomorrow. All of them highlighted in red are being increased. Anything in plain black are staying the same. And it was probably about a 60-40 split. 60% of the products in this list were green, 40% were red. So despite a lot of them decreasing, there was also some increases mixed in. So it's not fully sort of positive in that sense. However, other lenders, so Precise Mortgages, they also do a lot of bridging, and then normally historically they've always been one of the cheaper lenders in the bridging market for your more straightforward bridges. They announced some big rate cuts on their bridging products over the last week. Aldermore, a very big lender in the specialist buy-to-let space. They've had a great product over the last year and a half or so, which is called a multi-property product. So it's perfect for people for landlords that have got single self-contained units in their personal name and they're incorporating them all in one go, all on one mortgage application, all properties on one mortgage direct debit, anywhere between 2 and 30 properties all on one mortgage. And what that product has been offering for a long time is free valuations. And if it's a remortgage, so this isn't valid for the incorporation side of things, but if it's a remortgage, they offer free valuations, free legals, or if it's in a legal company, they call it fee-assisted legals, with the obvious fact that they still require you to get independent legal advice for your personal guarantees, so they can't call it free. Now, that product has been quite a big one, certainly for people who've got a couple of properties up for renewal all at the same time, as long as they're the same asset type, so single AST or all HMOs, they can all go on one application. So yeah, those products were reduced by up to 0.3%, which kind of is in line with that 0.25% reduction today. So it's a mixed bag. I think overall we are seeing more positive news in the market rather than negative in terms of rates and everything. The main thing that I see when lenders are providing pricing updates, it's actually more down to their service levels rather than what swap rates and base rate is doing to a certain extent. So you quite often get the case where a lender, Fleet Mortgages is a prime example. They've been one of the cheapest lenders for the last 6 months for limited company buy-to-let mortgages, and even personal name to a certain extent if it's more for portfolio landlords. Now, at one point, I think it was October time, they went up to about 5 to 7 working day turnaround times on assessing cases, as opposed to their standard 1 to 3. all of a sudden next month they hike their rates up to deter people from quoting them so that they can catch up and everything. So that's a common trend. You often see that, oh, base rates have dropped, and swap rates have dropped, but lenders increase their rates. Quite a lot of the time, it's just to keep their customer service levels better, or sometimes if they are a lender that does both buy-to-let and residential, they like to have a certain percentage buy-to-let to residential. If they're getting too many buy-to-lets, they'll hike their buy-to-let rates so that then they can get more residential and it evens itself out. So yeah, overall, I think obviously today's announcement is good. We still haven't heard from probably 50% of the market lender-wise. So it'll be interesting to see how other lenders react to it. We should know the true kind of impact that this has had kind of by early to mid next week. So yeah, overall, I'm happy with where things are going. It should just be nice to start seeing a few more generous product offerings from a lot of lenders, but it is going in the right direction.
Cool.
Perfect.
Thank you so much. That's
That's-
such a lot of information there. That was amazing. Thank you.
But that could actually, on a bit of news, that house sales actually soared in January, with agreed sales were up 12%. And new
Do you
listings,
think people are trying to beat a certain stamp duty
they
change?
certainly are. And new listings were at 10%, up 10%. So there's a lot going on, and this interest rate cut can potentially only help with that. One of the big factors, as you just said, is the stamp duty increase. They're trying to complete by the 1st of April. But also, I think Nationwide have played a big part in this with first-time buyers, with their 6 times their income mortgage, which is quite interesting. To see how many get repossessed further down the line because the affordability is not there. But
I mean, lenders have been pushing the affordability kind of limits quite a lot over the last few years. I think it's been. I remember when I first. I mean, I remember when I first was getting my first mortgage about 6 years ago. When I found out I was getting like it was a 4.78% roughly multiple of my income. I thought that's insane. When I told my dad, he was saying, "Oh, what multiplier do you get? Is it like 1.5, 2 times your income? Something like that, or 2.5, maybe at most," he thought. And I told him that. He was like, "That's ridiculous." He couldn't believe it. And now that if your combined income or one of your partner or one applicant's income is classed as kind of a higher earner, anywhere from combined income from anywhere from 60 plus, 80,000 plus, and 100,000 plus, lenders can increase this average of 4.5. They can often increase that to 5, 5.5, and like you say, Nationwide recently with their 6 times first time buyer helping hand mortgage offering, which does massively impact help.
This will scare you. When I applied for my first mortgage, I was an apprentice, so I was earning, I think, £27 a week.
Yeah.
And obviously, the affordability wasn't there based on the calculation of your income. But what the lender used to do back in the day was write to the company accountant to confirm what your earnings were. And my accountant came to me and he said, "What do you want me to put on this form?" And I said, "Well, it's just enough to make sure I can borrow this amount." And that's what he did. So that's the only reason I got on the housing ladder, really, is because of a bit of a white lie, really.
Yeah. Now, if lenders found out about that these days, then you'd be blacklisted.
Yeah,
so
we're talking a couple of years ago. So.
Yeah, a fair few years ago now.
So, Jake, what do you see from the point of view of property investors? What do you see as being like the biggest hurdles for them at this moment in time? Because obviously you're speaking to property investors all the time. Property investors at all different stages as well, whether they're brand new or they're very seasoned. What is sort of like the biggest challenge, the biggest struggle that you're seeing at the moment?
Combination of the age-old tale of obviously outdated English conveyancing, being all paper-based and requiring a lot of signatures here, there, and everywhere, and a lot of lenders still insisting on like a full legal due diligence, which does slow things down far too much than it needs to be. But from an actual lender specific side of things, I'm finding underwriting being a lot more in depth over the last sort of 6 to 12 months. Prime example, I'd had a customer just over a year ago. I sorted out the original bridge for him, came back nice and quickly for the refinance, and other than a small little hiccup where they checked the land registry to make sure that it had been updated, they checked it 3 days prior to it actually updating. So we were chasing around for 4 to 6 weeks trying to get the registration expedited, where neither solicitors actually looked to say, oh, actually, it actually happened just before, like a few days after it was checked last time. So no one checked in that 4 to 6 week period. But in terms of the actual underwriting, really straightforward, minimal kind of concerns with the pre and post works kind of uplift in value and everything like that. Fast forward 6, 7 months afterwards, we submitted a case in September, of 2 cases, and it's taken 4.5 months to get the lender to be happy with the original source of funds and the validation that the increase in works has only come from the actual works completed. They say, look, the works carried out that doesn't warrant this uplift. It's like, well, you've got an independent valuer confirming this valuation. So what's the issue here? They say, well, you bought it too cheap. You only spent 15,000 on it. Yes, had an uplift of 50,000. I said, well, they just they got the property at a good price. So it's things like that that are just really frustrating, as well as lenders getting caught up on the original purchase. So another case, ironically, the exact same lender who's being difficult on this other one, they purchased the property through a sourcer. Property had gone through auction a couple of times, hadn't sold. The landlord who was selling the property had a few properties that he was selling. His health had deteriorated in recent months, and he just wanted to relieve the stress of having to deal with tenants and everything. So we're just trying to sell his properties. A couple of failed auctions. This sourcer went in with a cheeky offer, and he said, look, I've got a guy here who's got the cash available to make this a quick transaction. He accepted a 25,000 below market value offer on this property. And this is the one that the lenders come back saying, okay, the works carried out do not warrant this increase in value. So we end up having to explain the situation. And because bear in mind, this is 4 months down the line, because the property was originally purchased and classed as a distressed sale, they've declined the application to lend as the remortgage lender. And I've pushed back saying, how does that make any sense? Because I understand it if you're not comfortable supporting a purchase of a distressed sale, but as long as a solicitor has done the legal due diligence for that original purchase, and you've now done the remortgage due diligence and everything, got an independent valuation confirming the improved value, and that is an achievable market value. They've put their PI insurance on the line to that figure and everything. Where's the issue? But no amount of pleading and arguing has got that approved. So again, another real frustration. So it's just lenders getting caught up on things that I think are being looked into in far too much detail compared to how much they used to.
We had experience of that. We were buying one about 15,000 below market value, which equated to about 12% below market value. So it wasn't a big purchase. It's direct to vendor, and then the lender at the time, which was Shawbrook, said, you must have that vendor under some sort of pressure to sell that far below market value, so we're not lending. And that's ridiculous.
Lenders like a 10%. I think normally the threshold is normally 10%.
Yeah, but unless you're buying in bridging or cash, then you're not going to be able to buy investment properties, are you? Through mortgaging.
No.
So it's a difficult one.
So it is a case of making sure that you do well. You record everything about the purchase, I suppose. I mean,
as much detail when you go to talk to a broker. So let's say you're using me. I always try to. A lot of people come to me, obviously, for the original purchase. I've got a customer who's just come back to me for about 9 months ago when I last worked with her, and she was querying whether to purchase this property with cash or go down the route of a bridge. So look, there's pros and cons to both. Obviously, cash is cheaper, quicker, easier, but you run the risk of what if a mortgage valuer doesn't approve of that property and they deem it unmortgageable, or they deem you as unmortgageable, or the fact that you're tying up over £200,000 of your cash in a property, which, like I said, if there's any issues releasing that money in the future, that's all tied up in a property. Whereas on a bridge, you can just do 50% loan to value, for example, and you can get really, really low interest rates, not too far off kind of mortgage rates to a certain extent. So although it's wasted money in the sense that you've got the cash to pay for it anyway, you've got that peace of mind that there's an independent valuation being carried out, so that you know that the valuation is going to be accurate, hopefully, for your purchase price. If you're going to do any works to it, you've got that peace of mind of a kind of a worst case scenario GDV, because they are often conservative. And from the remortgage perspective, a lot of lenders don't like remortgaging within 6 months if you bought it with cash, from an anti-money laundering perspective and things. So quite often, even if you just get a little £50,000 bridge on a 200 purchase price, that can be the difference between having access to 10 lenders within 6 months versus 2. So there's pros and cons to both in that sense. But yeah, it's.
I think what we endorse to anybody that works with us is you start with the end in mind. So you make sure that the exit strategy works before you get into the deal. So
the same advice I give people.
Everything in place so that you make sure you can get your desired exit before you even get into the deal. So yeah, but
it's even the same with simple remortgage inquiries. Let's
Absolutely.
focus on the long-term plan for the property, and then I can fine-tune my advice accordingly, rather than looking at the short-term rates are where they are right now. Let's look at for the future. It's the same, obviously, it's the same principle throughout.
So just had a bit of a woo-hoo good news. Mortgage rate, Bank of England base rates been cut. Now the Bank of England have just announced, headline just come through, hot off the press. The Bank of England now halves their growth forecast for the country, the economy, and warns of higher inflation in an uncertain world. Where's the logic?
Well,
they don't go hand in hand, do they?
Yeah, no.
The rates come down because inflation came down when they're expecting it to go up. And now they just said they've halved their forecast for the economy.
Yeah, they also said that they only believe that they only naturally need 2 further base rate reductions to meet our 2% inflation target, which, compared to a lot of the forecasts, a lot of people were hoping for base rate to settle around about 3.5%.
Yeah.
That suggests maybe only 4%. Look, who knows? We're not mind readers, but as long as it goes down to a certain extent, that's the important thing for now.
The base rate might kickstart some economy, if you like, so it might not be quite as drastic as they're predicting.
Yeah.
That's amazing.
Yeah, that's my positive mindset for the day.
Thank you so much, Jake. Honestly, I love that. This is what makes you actually basically our favored mortgage broker, is the fact that you can give so much like behind the scenes information. It's not all just about does the deal work, but you're able to give your experience, your knowledge on, how the mortgage companies, how their minds work, which is something that we impart on our mentees a lot, is like get your head in the mindset of the mortgage company, because the exit is for them to lend you the money, so you need to understand their way of thinking. So thank you so much for
awesome.
No problem.
Thank you.
Tell everybody how they can get a hold of you, your company name, what details do they need to get hold of you if they need
if you like as well.
Yeah, I'll pop it in the chat, but yeah, calculateduk.com, that's the website. It's property tax and obviously property finance all under one roof. So all of our details are on there. Mortgages at calculateduk.com is the easiest way to get hold of me. Or if you join the WhatsApp community, the Moneytree WhatsApp community, I am in the WhatsApp chats in there. So you can find me. Obviously, name is Jake. There's a picture of me with my lovely dog as my profile picture, so it's easy to find.
Jack, if you could pop the link in for the WhatsApp community group
Yes,
that
I shall
everyone's
do
free to
that.
join.
Yep.
And then obviously everybody can promote themselves on a Friday.
Indeed, indeed, indeed.
Let
That's
everyone know what
amazing.
they do and yeah, how they can help people. It's
Wonderful.
the community of sharing and giving good advice and yeah, and connecting, basically connecting everybody and creating collaboration, etc.
If you have any questions for Jake, either contact him via email, or if you're going to hang around till the end of the show, then put them in the chat. We'll have like 5 minutes, maybe 7 minutes at the end, where Jake can do a Q&A. Or if you've got any questions for Neil or myself, then pop them in the chat and we'll address those at the end of the show. So thank you. Just before you sort of disappear, Jake, if you're not going to hang around,
I'm still here, yeah.
I
He's
have
not
a
going anywhere.
question. I have a question for you. Is what has been your biggest inspiration, full stop? So in your whole being, your whole life, who has inspired you, or what has inspired you the most?
No pressure.
I'd probably say my dad, to be honest.
Yes, my boys say
Yeah.
that.
Yeah, 100%.
Wonderful.
He's always been the person I go to for advice, always the one who's supported me with any hobbies I've done and everything. He's always had a ridiculously strong work ethic or kind of motivation. When he puts his mind to something, he puts 100% into everything. So yeah, definitely, that's actually quite an easy answer for once.
Lovely.
There's
That's
young
so
Mr.
nice to
Boyd
know.
appeared on our screen. Long time no see. Looking well. So yeah, another quick bit of news actually, which surprised me. This was in the press today, which really surprised me based on what we've been seeing personally in our investment area, is that rentals have been reducing. They dropped in the last quarter of last year, which really surprised me. And that's been the biggest drop or first drop in rent increases since 2019. Now, we're still seeing in our investment area that rents are edging up. So that must be area specific and on average over the whole of the UK. But interesting, because we're getting some really buoyant rents, aren't we?
Yeah, I think I saw a similar thing. I think I saw a similar post at the start of this week, or I think maybe it was a conversation I was having with another customer. But yeah, it's like very area specific. But I think the UK I think when they combine it look at the average figures, it's overall there's actually more reductions than there are increases.
And they don't include London in that either.
No, because London's its own market in its own right.
Absolutely, yeah. So Mrs. Dobson, what's next then?
Okay, well, I was just going to ask you some questions actually. Let's do a little proper
There we
like
go. Here we
interview.
go.
Because, we talk about property. Well, obviously, the whole point of the show is to talk about property. We talk about different property strategies. We talk about, a lot of the behind the scenes stuff, like Jake's just obviously imparted a great knowledge to us. But it's just about getting to know you a little bit more. Obviously, I've been in your
Do you not
world.
know me well enough then?
I've been in your world for quite a few years.
Yeah, you didn't have grey hair, and I had a little bit of hair.
But yeah, I just thought I'd get a little bit of a getting to know you sesh really for our viewers and our listeners.
All right, so you're going to ask me questions, or you just want me to
I am going to ask you some questions.
Go for it. Go for it.
So, tell me any changes that you've made for 2025.
Well, but
I
one
know.
of the big things well, there's quite a lot of things I'm really awful at, to be fair. One is staying focused. One is concentration. Another one is reading. So yeah, I may come as a surprise to you all, but I'm not perfect. But I have set myself a task to read 6 books this year, which to many doesn't sound a lot. To me, that's a bloody mission. Because even when I'm reading, my mind's elsewhere. So I have and I don't know if you've seen this, Mrs. D, but I've been going at it. I've been trying very hard, and yeah, I just think I completed the second book last night, and we're only second week of Feb. So, and I'm taking a lot out of it, and also listening in the car now to Audible, which I spend quite a lot of time in the car because our investment area is a good hour and a half, 2 hours away. So yesterday we probably got through 4 or 5 hours of Audible out and about on viewings, and it's a good use of time actually, which generally I would be listening to the music quizzes on Radio 2 and then looking for some decent music after the quiz is over. Because but yeah, so I've decided really I'm going to make a difference really. So yesterday's was the slight edge, and I'm a lot edgier today than I was yesterday. Yeah, so that's one thing. Obviously, people that know me know I've lost 3 to 3.5 stone over the last 18 months. And the target really is to maintain that, which I'm doing. I put on a couple of pounds between the beginning of December and the end of Jan for obvious reasons. But yeah, even now that I'm maintaining it, so I'm happy with that. I feel better for it. Bit more mobile. Yeah, what else do you want to know, really? Golf twice a week now instead of once.
So just to go back to like the book and reading, because I have got my nose in a book most of the time, or I'm watching something on YouTube, or I'm listening to a podcast or
Boring me,
something.
yeah.
I'm a prolific sort of knowledge seeker. So how, now that you've now introduced this routine of, especially listening to books on the go when you're in the car, how do you think that has actually, just in this short space of time, so really from the start of the year, how do you think that that's actually changed your mindset, your way of thinking, the way you're doing things? What do you feel has been the biggest change?
Biggest change, I've got more structure. I'm more disciplined, definitely. I think you might have noticed that. If you take your face out of a book, you might have seen that. Yeah, more disciplined. The fact that we're real people. We had a phenomenal first 6 months of 2024, and by our standards, a disastrous second 6 months. And I attribute a lot of that to the fact that we took our away focus. We weren't focused on our business. It's our business. We left it, a lot of it, to our management companies, and they don't treat your business like you do, and got a little bit complacent. So it's very much December, January has been very much getting our, excuse my French, our shit together to, really take control of our own business and make sure that they're profitable. So it's discipline really, and focus. Yeah.
And how do you feel like,
I'll have feedback from you. Have you noticed any changes?
well, the fact that you are not looking at your phone before you go to sleep, you're actually, well, you say you're listening to a book, but I hear a lot of snoring going on. So you're sort of like, you're listening with your eyes closed.
Subconscious, yeah.
Because obviously that helps you. But yeah, definitely. And then, yeah, listening to books on our journeys and stuff, which I do anyway. But yeah, that's it's amazing. It's amazing to see, you I have learned not to, if you nag someone about something, then
No
they're never
chance.
going to do it. So it
No
has to be on
chance.
people's own terms.
Yeah.
So I can suggest,
But
but yeah, it's been amazing actually.
well, we've
Good
set
thing.
some seriously big goals for this year to try and because if I again, I don't want to repeat myself, but if I summed up 2024 in one word, it would be incomplete. We didn't achieve what we wanted to achieve. And I'm very much not going to go through 2025 the same way. We are going to go above and beyond our goals, which we can share with people sometime. There, we can share the number we want to hit, and we can share, if you like, at some point how we're going to achieve it. And when you break it down like that, it looks very achievable. So I'm busy working on stuff. We've actually sort of implementing a new property strategy, which we're going to keep under our hat for a little while until we master it. And then once we master it, we'll share it with everyone, because that's what property is all about. There's enough out there for everyone, but we need to make sure it works. We put a lot of time and money making sure we get everything legally right. And once we've nailed a few deals through this strategy, we will indeed share it. So I'm excited about that, because I think it's got legs, and I think it really could become something big. We're also looking at much bigger developments, because we've got some real pledged money behind us. So other people's money, big money. So that gives us opportunity to look at bigger stuff. And what I really finding difficult initially was because when we started, we had no money at all. So we needed other people's money to get going. We were buying 70, 80, 100,000 pound terraced houses, adding value, drawing all our money out and rent them out. And we got very sort of confident and adept at that, and we were doing that consistently. So to transition into something that's got like a 2.5, 3 million price tag is very difficult. Okay, we've got a portfolio of something around 37, and we've done new build and we've done commercial conversion and stuff. But my mindset now, and I've had to sort of educate myself and convince myself, is the price tag is absolutely irrelevant. The risk's the same, whether you're borrowing 40,000 off a private individual or you're borrowing 2 million. The consequence is the same if you get it wrong. So, and I've got my head around it now, and I'm looking big, going big.
I tell you what has been surprising, actually, because I've been focusing more on like a business awareness, like building our clientele, bringing in new people as mentees, and growing our mentorship program. So I've been spending a lot of time on that. Well, you've been doing like the growing the portfolio and finding new business partners and doing that sort of thing. But when you showed me the numbers, actually, on the project you were analysing last week, it was very interesting how the stamp duty change imminent.
That amazed me.
The lower end, like what we have been used to buying, the stamp duty is going to make such a massive difference to like our purchasing costs. So we're going to have to reduce our offer by quite a substantial amount, like big percentages, because they're lower value properties. But on these higher value projects that you're looking at, the stamp duty change is like, it really makes no difference to the deal. It is so small. So for me, that just like, I was like, the big projects are going to make more sense, especially with the impending stamp duty changes, because it makes no difference to the deal. Where the smaller ones, it's going to make a huge difference to the cost of the deal.
I can't remember what the offer price was on it, but if we was to complete prior to April the 1st on this deal, the stamp duty would be 62,500. If we was to complete after the 1st of April, when the increase, the stamp duty is 65,000. There's only £2,500 difference. In the grand scheme of things, the size of this deal, it's loose change. I know we want to save in every area we can, but it's not a make or break on the deal. You'd still push forward with the deal, because the 2,500 is fairly insignificant for the size of the reward at the end.
Yeah, it's really, really surprising. So if you would actually, just for our viewers and our listeners, the stamp duty change, April, can you just tell me what you're seeing in the market at the moment, in the different like platforms, the different places where you can buy property from? What are you seeing that's actually happening right now, real time, because of what's going to happen in April with the stamp duty?
But the most simplest thing to point out is the fact that just have a look at the auction houses and see how many lots are going in there, because everyone wants to, when the hammer drops, they've got 28 days to complete, they're going to beat the stamp duty increase. So historically, going back 2.5 years, the mortgage house that we use the most, which is Auction House East Anglia, they'd have sort of 70, 80 lots going through. They've got 130, 140 nowadays. And it's all because people are looking for a quick exit. A lot of them are landlords with tenants in situ. So they go through several times without any bids. And then we go in and give them a really cheeky offer because they're getting a bit desperate at this stage. They just want to, we solve their problem. They want to get rid of the tenant. They don't want to deal with tenants anymore. The only way to get rid of the tenant is to sell the property. So we solve their problem. But it is, interestingly, if you look at Rightmove as well, the listings are, they're more calculated. So they're looking at the stamp duty impact before they value the house. So they get listed at a value that has the least impact on the stamp duty to some degree. I mean, they're not knocking hundreds of thousands off, but they're actually putting them in the bracket that doesn't, increase your stamp duty too much. So that's quite interesting. Yeah, but ultimately, I mean, even today, we've spoken to the auction house, rang us, Auction House East Anglia, and said that, everyone really. One interesting thing they told me, actually, which I didn't think they were right, and we need to back this up with evidence, but they said that the stamp duty is calculated on the fall of the hammer, not the completion. I thought the stamp duty was calculated on completion.
So it's on the exchange, because when you put the hammer down, that's actually when you exchange, isn't it? That's
Yeah. So, if you've got a property to list, their next auction is on the 12th of February. So if you've got a property you want to sell, you're not going to get it in time and get enough marketing out there to get any interest in it. So I thought, well, actually, you're going to have less lots in March, which is the 26th of March is the next one, than you will in Feb. But he said, well, it doesn't make any difference, because if you agree a sale on that day, the hammer falls, you've exchanged contracts, that's when the stamp duty is calculated. So the fact that you complete in April doesn't make any difference. And I need to double check that.
Oh, yeah, that'd be good. So we'll let everybody know if that is the correct
Yeah,
thing.
tune in next
or
week
not.
and I'll have an answer for you.
Yeah,
Just to
absolutely.
clarify, yeah.
So what would your best piece of advice be for people looking to get into property like today?
Get educated. Simple as that. Where would we be if we hadn't invested in ourselves? What is it, 7 years ago now, 2018, when we were actually on the breadline. We had no money. We had debt, to be fair. But we backed ourselves. We stuck £25,000 worth of property education on credit cards, numerous credit cards, because we didn't have a big enough credit limit on one. And it was the making of us, really. It changed our direction, our goals, our beliefs. We backed ourselves. And now we share that with everyone else because it was phenomenal. And we still keep investing in ourselves. I mean, we've got great mentors. We've still got 2 mentors now that cost us a significant amount of money, but keep us on track. So, and keep us pushing forward. And their knowledge and being around them is phenomenal. So property education, get yourself a mentor. Do you want me to be brutally honest?
Go for it, yeah.
Yeah.
Tim's nodding, so yes. We've had an audience participation, yes.
I don't want to put anyone down, but don't become a number of a big company. Get someone that's going to actually talk to you direct rather than talk to you through a big group. So that, does that make sense?
Yes, it is. You want the one-to-one, the personal service.
Well,
yeah.
everybody learns different ways at different rates. Has got different goals. And, you want to tailor whoever you go on board with. You want them to tailor it to you and the way you learn and the strategies you want to implement. We, as many of you know, we still do sort of subcontracting for a big company, and we go in a room of people that are doing, probably in the room, there's 6 different strategies, and we're doing a presentation on one of those. So to almost 80% of the people in the room, it's not relevant. you know, and they're just wasting their time, but they're paid big money to be there. And so, yeah, find someone that will tailor it to your strategy, someone with knowledge that will, you know, has got experience in it, not just read a book and then spills it back out to you. Someone that's, you know, walked the walk and
In the thick of it.
absolutely, yeah.
I think my biggest advice would be hang around people who are doing what you want to do. So
Yeah.
always be the baby in the room, whatever you're doing, always be the one that knows the least. Even we still do this, Neil and I do this. We sit in a room with very experienced people, feeling like we know nothing, feeling like we don't deserve to be there. But the amount of knowledge and information, and it actually, the people in the room, they don't ever look at us like that because we're there to learn, to share. There's always something that we can offer. But it's just that every the positivity, the sharing, the helpfulness, and the amount of knowledge that just very easily flows as well. No one's holding anything back, and it's just an amazing space to be in if you can get yourself around the right people. Magic definitely rubs off on you when you are in that environment.
Everything it reignites you because, you know, we're fortunate, I suppose. There's two of us in our business, so we've got someone we can bounce things off every day. But if you get in a room, we still rub shoulders heavily with Mark Dalton, don't we? John Penberthy, he's not in, well, he's into his property in his own way, but his business isn't property. He's just an inspiration every time you're around him. And, you know, he backs you, believes in you, and he'll put his arm around you and help you. But that for us is more about marketing and, you know, helping presenting to our mentees, etc. That's why we bought into that. So we deliver good quality stuff.
Yeah,
so,
he's amazing. Just his whole
you come
ethos
away,
on us.
reignited and with new drive, new passion, and new desire to serve. Really.
Yeah, 100%. We see the way that he treats us and his whole crew treats us as well. And that's what we then, we like it. So we're like, let's treat our people like that as well. That's amazing.
Well, I
And
got
I'm
distracted by
trying,
an estate agent call me. Sorry.
and I'm trying to get Mark Dalton onto our property networking as well. I'm trying to get him in as guest speaker. I keep asking him, and he has made noises that he'll come, but he seems to
I've
be.
heard a couple of pints of Carlsberg does the job for him.
Maybe that's what we just need to put in his in.
We put a trail from Luton down to Carlsberg.
So yeah, it would be amazing if we can get him to come down south slightly. He seems to be going to Ireland and Scotland and up north, and he doesn't seem to want to come past his home place of Luton. So we're trying to get him down this way. Well, that's amazing. Thank you so much. If you've got any questions, then here's time to either unmute or pop your questions in the chat. So if you have got anything to ask Neil or myself or Jake, if you've got any mortgage or bridging questions, then feel free to ask them. Hi, Tim.
We must have covered everything off. Oh, go for it,
There
Tim.
you go. See, there you go. Someone come out. Someone come out the woodwork. So who
How
are
you
your
doing?
new mentors currently?
Our mentors. Oh my goodness. Well,
In property, really, we still attend a lot of Mark Dalton stuff. And Mark Dalton is big about rubbing shoulders with the right people. So we just make sure we're mingling in those areas. But we've bought heavily into a company called Ad Clients. And I'm talking heavily. I could have put a deposit on a terraced house. But it's all about value for money, and we've got phenomenal value for money out of it. And it's really helped us position ourselves from a mentoring point of view and delivering that and creating content. So in modules, we don't get me wrong, we don't believe in modules from a learning. They just back up the sessions really. So they're there if you want to watch them. But yeah, it's all about how we position ourselves, how we present ourselves, and how we give the content in a, you know, a timely manner, a structured manner. so that people can get the best out of it, really. But yeah, that's really where we've put big money. Well, was it last year we bought into that?
Year before, I think it's
Yeah.
actually like year before, yeah. But it's about having your network. So our mentors have never actually left us, even though we're not actively like being tutored by them. So we haven't got one-to-ones. It is still being around their space. So we've got a hotline to Dylan Denetcher, who's been absolutely amazing. He's in the social housing space. Yeah, like Mark Dalton. We can hop into his space anytime we want. We know that we've got a hotline to him if we need him. Our business partners as well, because when you find yourself with an amazing group of people, your mentorship filters in through them because they're always learning. So Andy and Oliver, they're always learning. They're on some great programs, just as we have been and are. And so everything that us as a bubble, as a working relationship, it all filters through into everything that we do. The same, anything that we learn, then it gets filtered through to Oliver and Andy as well. So
Andy's now on our program,
it
and
is, yeah, it is about,
Oliver's bought into Simon Zucci, hasn't he? So
yeah. So it's really about the people that you are with pretty much like on a daily basis, and it's everything. So you get yourself a great team around you, and it will just filter through. So it is, the magic really does happen when you really identify the people that you're surrounding yourself with.
yeah, our latest collaboration or business partners, we've really got a three-pronged attack because we've all got very different skill sets. But together we're working on some big stuff. So,
Yeah.
but you know, ultimately I couldn't do that on my own because I haven't got the knowledge in certain areas, and neither could they. So we all need each other, and it's just great. And when you hit upon the right people and work alongside the right people, it makes life easier. Gives you more confidence in the deals you're presenting. And yeah, and obviously we brought Andy in as a guest speaker. Was it on the show
Last
last?
week.
So he came in and did an overview on mold and damp, which is obviously big in the news at the moment. So it's really relevant stuff. And you know, I've been working with Andy for a long time, but I learned a hell of a lot off last week's session on
Oh
mold.
my God, it was amazing. I
Uh,
can actually write a paper on that now.
when you think you know, and you can share, and then you get some even more knowledge that you can share, because that's what it's all about, which is why we built the networking event, really, is so we get all the right people in the room and share knowledge. It's not about, you know, knocking on someone's door and say, you got any money because we want to buy a property. It's about sharing your knowledge and your
Yeah,
experiences over the
absolutely.
years.
So I'll just actually touch on what we've been going through with our mentees for February.
Yeah.
So last week I actually was talking to them about your mountain of value that you stand on. Everybody has this mountain of value. Because one thing we're focusing on in February is about writing our investor proposals and what we can actually bring someone, you know. So we're always looking for working relationships and, you know, people to join us so that we can use their money for our deals, but they get a nice return from it. But it's about your mountain of value that most people don't realize how much they can actually bring, you know, how much value they've actually got with their life experiences, their business experiences, their knowledge, their insights. You know, everything that you've learned up until this point today is so much that you actually can bring, not just to the deal. You might not quite know the numbers, you know, you might need a mentor or someone just to help you with the numbers, but it's so, you know, what else do you bring to that working relationship? And that's what we're really focusing on this week, this month in our mentorship program is, you know, your mountain of value and how you can help that to you know, attract people to become your funders and your partners.
But everybody, nearly everybody, doesn't believe they've got a story, got anything to tell. And I've got a great example of this. Andy Tucker, who's ACT property maintenance, and he does everything in the property world. But we sort of forced him to do a session at our networking event, the in-person one, do a presentation, which is way out of his comfort zone. I've never seen him drink so much cider before than he did that day. And he was visibly shaking, wasn't he? And nervous wreck. And then he brought up his slides and he delivered the most amazing 40 minutes. And his story is phenomenal. I'd love to record it and share it with people because his story is inspirational. But to him, it's just what goes on in life, you know. This is what I did, this is what I done, this is where it went wrong, this is where I pulled it back together, this is where I got it wrong again, this is where I got it, and then this is where I had cancer. And you go, whoa, you don't even tell anyone around about that. So everybody's got a story. When you really start thinking about it, everybody's got a story that is really interesting to others and inspirational of some sort, you know. So I got asked the same. We went to expert speaker school and they said, oh, you've got to have a story. What's yours? I said, I haven't got one. I had the most charmed upbringing you could ever believe, you know. I've got 3 brothers. We live in a 6-bedroom house. We had a Jaguar on the drive and a Capri on the drive, and we went 2 holidays a year. But then they go, yeah, but go a bit deeper. What's really affected you throughout your life? And then it all starts to surface. And you think, actually, yeah, there were times when I had a bit of a hard time, but you just plow through it. You don't dwell on it, do you? And you don't look back. So, yeah, everyone's got a story.
Amazing. Right. Well, I think we're going to need to finish on that note because
yes,
it is an hour. Can you believe it? It's
Why,
absolutely blown. So I do hope that there's been information in this particular episode which has been useful. It's given you inspiration. It's giving you some useful knowledge that you can actually move forward in your property journey. Yes,
Lee,
Neil.
before you run off, couple of things people can do for us. If they could obviously show up again next week and share with anybody, and because we want to grow the audience so we can bring in big names, guest speakers on this. So the more people we get, the more inclined they are to accommodate us or join us. And also we've got we're building a waiting list for our in-person event, which is quite an interesting one for us. We're going back to basics. We're doing a full one-day event on what it was when we started, buy to let, but it's now buy, refurbish, rent, refinance, which is ridiculous. But anyway, so we are going right from the beginners right through to everybody will be very competent by the end of the day. So we're confident that we can teach them how to find their area, research their area, build rapport with the agents, negotiate with the agents, get the deals, run the numbers, add the value, refinance, rent it out, refinance, and so on. So the whole process we're going to share with everyone. And that's Saturday, 22nd of March at our usual place, which is the Cricketers Inn in Colchester.
Fabulous.
We've got a waiting list already, so we're looking at the numbers, because if the numbers grow too big, we'll have to find a different venue. But that's going to be, it's not many people do that anymore, I don't think, right back from the start, and so that's what we're going to do.
Wonderful. So if you want to get to be part of that, you'll get put on the waiting list. Then find us on Facebook, which is Dobson's Property Adventures, or if you haven't yet joined the WhatsApp group, then join that.
You put the link in
the chat. Yeah, the link is in the chat. But thank you so much.
Thanks, everyone. Take care. See you all soon.
Your time with us today. We'll be back same time next week, 12:30 on a Thursday. Thank you very much.
See you soon.
Cheers, guys.
Cheers.
In a bit.